It is time now for the Financial Corner. Board member Linda Spalding and General Manager Chris Mitchell are here to explain the financial health and activity of the HOA. Here now is Linda and Chris.
Welcome, ladies and gentlemen of Sun Lakes. My name is Christopher Mitchell. I'm the Executive General Manager here at Sun Lakes. And today's Financial Corner is not attended by Linda Spalding. Unfortunately, she cannot join us on this Financial Corner because under Civil Code, any candidate that is running for the board, and Linda Spalding is running for the board, they cannot appear, have their photo or video run on Sun Lakes or HOA media 30 days before the election. That's in the Civil Code. So Linda will not be joining me today for this Financial Corner, but instead you'll have me alone. And so when we talked about the Financial Corner and the purpose of it, it was really to cut through the noise. You know, ladies and gentlemen, I'll be honest. You hear a lot of things on Facebook, a lot of things out in the community. There's $1 million missing, or there's illegal acts going on. I'm here to tell you that's false. That's misleading. And I kind of think it's an effort, maybe by some people, to scare the membership. And so the Financial Corner is really here to cut through that noise, cut through the malarkey, best word to use right now, of some of the things that are going on. So this first Financial Corner that I'm going to do is, okay, say you don't believe those people, and you don't believe Chris Mitchell, who's First Service. So I'm going to tell you today where you can get the information to make a decision for yourself. Now this information is on the website, and I'm going to go through a couple of things, go through the site to show you some financial statements and everything, explain a little bit, and then let you decide and let you have the power to find the answers yourself. So join me, we're going to go to the website and actually have it here on the screen as well. When you log in, you have to log into the website, sunlakecc.com. And when you go there, I want you to go to accounting. There's a little title at the top, it says accounting. I want you to go there, and in it, you're going to see several things. My account, financial statements, audit, and presentations. So I want you to click on financial statements because every month, First Service produces a financial statement packet that tells you what has happened, where are we compared to budget, and gives you the financial information to kind of see what's going on with your HOA. So when I go to, let's go to accounting and financial statements, it will pull up a page that says financial statements and audit. And I want you to click on the 2022, and you'll see that the master is there, Sun Lakes Country Club, and the 3 sub-associations are there as well. So if you're living in the sub-association, not only do you get to see the master's financial statement, but you also get another set of financials for you, the sub, individually for your groups. And so I want you to, we're going to focus today on Sun Lakes Country Club as a whole. And so I want you to click on the most recent one that's produced. It's January, and so if you click on Sun Lakes Country Club January, a financial statement's going to appear, and it's a PDF. And so let's go through some of those things, excuse me, as we go through. And ladies and gentlemen, I do have, as you know, my trusty sidekick of coffee. That keeps me going. The Christmas blend, as you may or may not remember, from my Coffee with a GM, one of my favorites at Starbucks. So with that, let's go through it. Now, the first thing you'll see on the financial statements is it's 43 pages, so it looks like a lot of information. And it is. And what we're trying to do, and what the board has done in the past, is trying to say, how can I provide you snippets so that it's easier to understand? We're also working with a couple of members about graphs, and so I'm hoping that we'll be able to provide you information in a graphic form. Some people are very visual, I am too, to see where's the budget, where's the actual, and you get a sense immediately what the financial condition is. But right now we're just focused on the financial packet that is produced. So the first thing you're going to see is what is a financial recap. Now this financial recap was actually created by Marcia Midget, our board president, and then worked with Linda Spalding, our treasurer, as well as our assistant treasurer, Ida Winsel. So this is a document that was actually created by the members, your peers, to include in our financial statements to give you a snapshot of what is going on in the financials. And so first off, you're going to see, and I know Good Day Sun Lakes, Bob Murray is going to overlay some of the video or the financials for you. But when you look through the financial, monthly financial, you're going to see it broken into 3 groups. There are 3 main groups. The administration operating, which includes administration, planning and compliance, operations, and recreation. That's in that group. Then another segment is golf course maintenance. There you have golf operations, golf pro shop, golf course maintenance. And then the third large segment that we have here is, excuse me, Sun Lakes food and beverage operations. And that is the restaurant and the lounge. That's Thomas. Lastly, we do have bingo. We report that. And the reason many members ask, why is bingo in there? Well, it's because the funds run through Sun Lakes bank account, as well as it is a committee that has been authorized by the board to have bingo games weekly. And so that's why it runs through the financial statements of Sun Lakes. That's why it's there. Because in the end, the association has some accountability and responsibility for bingo as well. So as we go through this financial recap, it really breaks down. I'm going to be like Steve Kornacki now, going through the election. It's this, but not as fast, ladies and gentlemen. But seriously, so you'll see in this monthly recap, it tries to say, hey, what on basically the cost areas that we need to really look at, like utilities, maintenance of the common area, swimming pool. You see some planning, compliance, recreation, property protection. Our community patrols reported in this administration segment. And then we have common area administration. So the financial statements are summed up very quickly in this recap, or very precisely in this, to say what is the assessment revenue, what is other revenue, and that can be your social membership fees, RV rental fees. Then you see the expenses, and it's laid out to say what is it for the month, what is it year to date, and what is the annual budget for these categories. And so you'll see through January that we have operating revenue for the month of $994,000. We have operating expenses for the administration segment of $737,000. So right now there is a surplus of $257,000 for the month of January. Don't get excited because it's just the first month of the year. There's still 11 more months to go. Now, as we scroll down, as you walk with me here, excuse me, golf course activity goes over the golf course operations. Now that is the pro shop, and that is the operations that's also run out of the pro shop for your annual memberships, your green fees, cart fees, the driving range. That is what's in the golf course merchandise, golf course operations. They're the ones that generate the money for the golf course. So that's Brian's team over there selling merchandise, clubs, clothing, as well as doing the memberships and the carts, etc. Now when we go down to expenses, you see golf course maintenance. That is Mark Birchfield's team. They're the ones who maintain the golf course and keep it up to the standards that Sun Lakes residents would like. And that has no revenue generator because the maintenance is a cost to do business, a cost to maintain the facility. Now Brian's team in golf course operations and pro shop does have expenses. So what happened? Well, for the month, the revenue that Brian earned out of the pro shop and through annual memberships, green fees, that equated to about $100,000. On the expense side though, Brian's department was roughly $38,000, but Mark Birchfield's department had $128,000 of cost. That is the manpower, that's the machinery maintenance, that's oil, chemicals, and we all know what's going on right now in our economy. Those prices are increasing. So for the month, the golf department had a subsidy, a loss of $67,000. Now lastly, we go to our food and beverage department. This is Thomas. Now, Thomas has restaurant and lounge revenue, and then restaurant and lounge expenses. That's your labor, that's the cost of goods sold, the food, the alcohol. So for the month, he had $89,000. For the expenses, he had $140,000. So food and beverage for the month was at a loss of $51,000. When you add all three of these together, the administrative portion, golf, and food and beverage, there right now is a surplus of $139,000. Again, this is just 1 month. Then you'll see year to date, well, we've only had 1 month, so it's $139,000. So this gives you a snapshot of what's going on with our operating activity. That's why you see to the left operating, because we also have 3 funds: the operating fund, the repair and replacement fund, and the capital improvement fund. And I'm going to go over that a little bit more later. So let's continue with this snapshot, because these were new things that were added last year. Both Marcia and Linda said we want to add a little more detail to say clarity. What am I spending on reserves? What's going on with reserves? And so you'll see repair and replacement, that's R&R, and capital improvement, CIP, fund activity. And here you'll see the money that comes in from assessments, the money comes in from interest, then the expenses, what has gone out for the month. So for the month we had $164,000 surplus from the amount we collected to amount spent. Now this was another member had said the surplus, there's surplus in the reserves. Well, the reserve, remember, we have to fund it. We're trying to get to 100%. We're at 66.3, I believe, as of the 2022 reserve study. But you're going to have surplus because you're getting money in from assessments, and we've kind of slowed down on our spend. Why is that? Well, some of the projects have slowed because we are working on the bunker project, but as you know, supply chain issues, getting replacement items, they're taking longer and longer. And so we've actually slowed down. The board has said, let's slow down, concentrate on what we can do and achieve quickly. So you'll see right now that there's a surplus. Now another question that was brought up is, what is this accounts payable in reserves? Well, actually that was an account that was developed to track expenses that have been incurred, or like I order a part, but I haven't received it, or the service hasn't been completed and I haven't paid for it. Now, under the accrual accounting system that we use for our financials, I must record an expense when it's incurred or a revenue when it's earned. Compare that to the cash, which is you and I run our households on cash. When I spend money at the grocery store, that's an expense. When I get a paycheck in, that's my revenue. So we run our financial statements on the accrual basis. So you'll see the accounts payable at the end of January, there's $47,000. What does that mean? That means an item that has either been ordered or a service that we've incurred but have not been billed for. We owe that, and we're going to have to pay that at a future date. So we record it in our financials as a liability under accounts payable reserves. Now lastly, because there's been thing about cash, where's the cash? Cash. Well, you might remember Linda Spalding and I did a presentation to the delegates talking about 2019 and 2020 when there was a huge cash burn. Decisions made by the board to close the restaurant off and on, kind of cut sales, and that burned a lot of cash. As well, unfortunately, with the pandemic, you might remember 2020, when the restaurant had to close and we had to move our services, we went through a lot of cash. And that's called a cash burn. We have so much going out very quickly, not enough coming in, businesses can't survive. So one thing that the board decided to do is, hey, we get a cash report, the board gets a cash report monthly, but we want to inform the public of what's going on. And so you'll see a cash activity report that shows what's the beginning operating cash in our 4 operating accounts, what cash inflows have come in, what have we earned either from assessments, RV fees, or anything else that we've earned, golf, what cash outflows, what have we paid? Well, we have to pay our vendors, we have to pay First Service. First Service is a vendor. So First Service staff does not work for Sun Lakes directly as employee, remember. First Service is the employer and contracts with Sun Lakes board for the service. So First Service is a vendor. Artistic, Securitas are vendors. So we have to pay them. That's the cash outflows. Then sometimes there's reconciling items, a deposit in transit, or checks outstanding. So we give a refund to an RV lot or an RV owner that has stopped their rental and they haven't cashed the check. Well, that's an outstanding check. We have to record it. And so those are what reconciling items are. And then finally, what is our ending operating cash? Do we have cash? Cash is good. Do we have more cash? Do we have less cash? So this gives you a snapshot at the end of the month, what happened for January. So again, great report that was developed by your board to produce to the public. So let's go into something deeper, the balance sheet. Again, a sip. Take your drinks if you're with me out there. The balance sheet. The balance sheet is a key important piece of the financials because it tells you at a moment of time what we have in cash and investments, what is owed to us by people, residents, what is other assets we have, and then liabilities, what is owed to people, and then finally our equity, which is the historical net income, net loss for the years of the corporation. This is a key point because the board made a change. You might remember, bring back the Wayback Machine to go back and say, well, let's see, 2019, the board made a choice to go to first service. The board had demands that they wanted a first service. They said, we want our financials different than other associations. We want to break out by fund. And remember what I said, operating fund, repair replacement fund, capital improvement fund. We want to see the activity within the funds. Don't consolidate it so it gets confusing. First Service said, you got it, we'll do it. And that is legal to produce a financial statement in the fund format. And so you'll see the operating fund, the reserve fund, the capital improvement. You'll see what the cash is and the investment is in each of those funds. You'll see what is owed. Now, here's the thing that there's also been some confusion. Well, there's illegal borrowing, or the due from is wrong. Look at the financial statement yourself. So work with me here where you see due from reserves. The operating fund is actually saying repair, replacement, capital improvement, you owe me money, not the other way around. That's a popular statement out there that is a misunderstanding, or frankly doesn't complete misunderstanding of fund accounting. Now, what is showing here on the financial statement is actually this bracket in reserve. That means the reserve fund owes the operating fund $59,000. That is not illegal. If I need to pay a vendor and it's a reserve item, it is run through the operating to pay the vendor to meet our terms of net 30. That vendor then is satisfied, thank you, you've paid your bill. Now I need to get the money from the reserves because it is actually a reserve expense. For example, some of the work we're doing on our bunkers. In order to keep and meet our timelines to pay our vendors, because we do pay our vendors, that vendor will be paid sometimes through operating. That creates the due from, meaning I paid from this pocket operating, reserve you owe me money because I paid this on your behalf. That's what this financial statement is saying. Don't be confused. Don't be fooled or hoodwinked. The reserve and capital improvement owe the operating. There's nothing illegal going on there. If you don't believe me, look for yourself. Now let's move on to the income statement. This is the income activity of, let's go over payables and everything. So you can see the current liabilities. The main liabilities are going to be within the operating. That's your accounts payable, deferred revenue. So when a member pays for their RV lease for the full year, or the member pays for their golf membership for the full year, that's what's called a deferred revenue. Meaning under accrual accounting, I cannot recognize the full amount that I got from the golfer. I have to recognize it over 12 months. And so you amortize that revenue over 12 months. That's accrual-based accounting. Again, you'll see some of the other liabilities, accrued payroll. This is a key thing that a couple of members have come up. Oh, they're not paying their bill. Remember, ladies and gentlemen, what is First Service? First Service is a vendor. And the Sun Lakes board will only pay bills when they get an invoice. Now, First Service will send a bill saying, I paid Chris, I paid Jason, I paid the rest of the staff, here's my bill, and Sun Lakes, you have 30 days to pay me back. That's why you see an accrual. The board of directors does not control when First Service bills. They only control when I get the bill and I pay it. So you might see that, yes, oh, what do you mean? Chris and Jason aren't Sun Lakes employees? No, we're First Service employees. And First Service must bill. That's why you see accrued payroll, because they bill in arrears. That means they pay Jason and myself salary, and then they will bill the association. The association has 30 days to pay that bill. So that's what goes on with accrued payroll. And then finally, you see some equity. Now, one thing I will say that members should focus on of the equity section is, why is there a negative retained earnings for the operating fund, Chris? Well, again, go back to the presentation that Linda Spalding, board treasurer, and I did during the, I think it was October or November of the delegates, and explain, going back in time, looking at what happened in 2019. There was work done on the restaurant. So there was more cash going out than cash coming in. That created a loss. 2020, when the restaurant was failing and floundering because we had to close down, a loss occurred. Now those losses were never recouped from the membership, so the corporation still says, hey, I'm out of money. And John Clark, I'll give credit, a shout out to John Clark. John Clark, for years there was an invested operating account. It was like a little cushion, about $800,000 that was there from the sale of a Wailea property that had been foreclosed upon. And John Clark had always said, that is our cushion. Well, you notice that invested operating is gone because of what happened starting in 2019, 2020, and rolling forward. Now, the board in 2022 did have to raise the assessments. And I know that was a tough decision. But the correction needed to be made to help the longevity and life of the corporation to recoup and prepare for future losses. One big area was bad debt. There are homeowners that unfortunately have stopped paying. They have reverse mortgages. Either they've transitioned in life to another plane of living, or have gone to the lakes, or moved in with family and they've stopped paying. And the association doesn't get that money. And so that was one of the hard decisions the board had to make, of increasing the assessments to account for that. Over time, the goal will be to make this positive, but it's going to take some work. It's going to take managing the restaurant, managing the golf course, managing the operations. And I believe you've already heard the board say many times, because I know the treasurer meets with us weekly, going over what's happening in the financials. So that gives you a breakdown of the balance sheet. Now let's go on to the income statement. Now again, this is a consolidated. The next page, which you'll find if you're walking with me, enjoying some libations possibly, on page 5, this is the format we used to do it. Now remember, I worked with Associa before. That was the format we did. It is confusing because everything is jumbled together and you can't really see clearly what is reserve, what is operating, what's capital improvement. That's why we've gotten away from this. This report basically now is used to say, month over month, what are some big changes, and so you can see it. Let's go on to the income statement. Now this is a large for the whole corporation, of what is the operating revenue. And an income statement really is just what is the income, what are the expenses. At the end of the month, am I positive, meaning I have net income, or negative, I have a net loss. And so that's what this breaks down for the entire association into the 3 funds. Sing with me, because you remember, it's the operating fund, repair and replacement fund, capital improvement fund. Now this is a good report, but one report that I kind of like, and we'll get down later, is on the department level, how are we doing? So income statement, you can see, it has all the expense line items, because we use a general ledger to record in those general ledger accounts transactions. And so you can see, for example, cable TV, you'll know, what is the cable TV? What are we spending on our Spectrum, bulk cable, and internet? You can find that expense here. So the income statement breaks down those revenue and expenses and classifies them into general ledger accounts and account numbers. Now, I'm going to scroll down because a key area that I think the members should look at is the variance report. Now, the board back in 2019, 2020 said, hey, any account that has a positive or negative $5,000 change and a positive or negative 10%, you need to report what that variance is. And so this is a variance report that says, for the month, what did I have? For the budget for the month, what did I have? And what is the variance? What's the percent of variance? And then the explanation of why. Great report, because if you have questions of, why was this higher than normal? Go to this report. If it meets that criteria, it's going to be there. You have the power to find the answers yourself. It's there in front of you. Let's move down to, so the variance report's a great report, and then we come to the consolidated. And this is a report basically just, again, with the key 3 departments of HOA operations, food and beverage, golf course. Where was the whole department for the month actual? Where were they for the budget? What's the variance for the month? And then year to date. Great report for a quick, 3,000 foot level glance of where we are with our departments. Now let's get into the meat of this with our departmental expense to budget. And so you'll see that this is HOA operations, then it goes into golf course and food and beverage. This gives you the detail. Excuse me. What did we get in social membership fees for the month of January? So I would look for that number, social membership fees, $19,950. That's pretty good. A lot of houses sold. Now, though, we had budgeted $20,833, so we came short from our expectation. This is where you'll get to see and kind of dig into each of the departments to see how they're doing. This is a main area that the treasurer and the board as a whole look at to say, when they meet with the department director, how are you doing within your department? And so a key thing is to look at this, report what's going on. How are we doing with water? How are we doing with insurance, bad debt? This will be the key data for the individual departments to go to. And there are several pages because each department, as I told you before, golf operations, golf maintenance, it is all in here. And that is pretty much the bulk of the financial statements. Now one thing, last but not least, let's go to the last page. That's page 43 for the January. This is your investment report. So you want to know where's my money? How much money do I have? Just need to know that. What do I have in investments? Go to the investment report. It's broken down by the operating, capital improvement. We have some liability for Lyons and Pulte. Those are former vendors, Pulte, who developed the property Lyons Home. Those were actually settlement funds set aside to do repairs. Pulte to help with roads, Lyons to help with the wall on Riviera and Singing Hills. So those funds are kept separate to account for, and as Mark Schleiden utilizes those for repairs that qualify, the funds will come from that. And then finally, our biggest area is the repair replacement. You'll see at the end of January, cash and CDs, $10 million, over $10 million, $10,200,000. Let me get a quick sip. Drink with me if you're watching. So again, we see and there's some detail. M&M is not the musician, it's actually money market. CDs are certificates of deposit. T-bills are treasuries. Now, you say, well, why are we invested in such conservative investment vehicles? Well, the reason is boards now and in the past, and actually every HOA board I've ever dealt with, has been fearful of losing money because you, the homeowners, earn your hard-earned money and you pay your assessments. The board then says, I've got to pull this aside for future repair and replacements. I don't want to lose that money. So the boards, and a board like here at Sun Lakes, your board, has said, I want to follow an investment policy, which we have, that says protection of capital. Means I don't want to lose my principal. If I put $1,000 in, that $1,000 better not be lost. And boards do that because they have a fiduciary duty to you, the member, to make sure they're not losing your money. That is a safe investment. Now, you can look at your own 401ks and your investment paperwork. When you have safe investment, that means it's not risky. You'll earn a low return on it. Riskier investments, when you go to a Bitcoin or other thing, that's very risky, but it also has a high reward potential. But you could lose that money. What happens, as we're seeing right now with the war in Ukraine, stock market's been tanking. If the association had funds in that stock market, whether in an S&P, an ETF through the NASDAQ, we would have lost money. That means projects that we may do would not be able to be done because I potentially lost that money. That's why boards choose the safe path of investing in money markets, CDs, treasuries, because money markets and CDs are covered by FDIC, or FDIC insurance, which says any money at my banking institution up to $250,000 is protected. Treasuries are backed by the full faith and credit of the United States. So those are protected investments. So that's why the board chooses this route. So now let's look to say, okay, Chris, now you've told me where the financials are, but I keep hearing somebody say there's illegal activities, and I'm just scared. So, okay, you don't believe me. You don't know where to get the answer. Let's go back to the website. On the website, you will see under accounting, there's an audit tab. What is that? What's an audit? Is that an IRS audit? Those are bad. Yeah, no, not IRS audit. Your board and boards of the past have hired independent firms, auditing firms, to review the financials. Now, let me say that again. That's a key thing. The board hired them, not First Service, not Associa, not Chris Mitchell, even though I am a licensed CPA. We did not hire them. The board made the choice to hire them. And why do they do that? Because they want an independent firm to come in and say, I want you to check on the First Service transactions. So they look at transactions. They look at estimates. They back it up by doing confirmations of what does the bank say I have in the money? What does the First Service on site say? They also look at the controls in place, internal controls. Those are a key thing for any corporation. Internal controls are, what are the controls in place to prevent fraud, theft, misstatement? They evaluate that. Now, for many years, I was an auditor. I actually audited government funds, corporations, and so I've had experience with auditing. And so one of the things that we want to make sure is the financial statements present fairly all of the information. Now, if you don't believe me, look at the audit. The audit, if there was something illegal, it would say there's an adverse opinion saying, oh my God, there's theft going on. We're reporting it on the audit. They would then turn that audit into the board to say, there's theft. But there hasn't been one of those. So could the comments of illegality be wrong? Maybe. And I would say yes. Please, look at your audits, ladies and gentlemen. The audits for many years, and they're on there. You can look back to, let's go down and look. You have audits all the way back to 2013 on the website. Oh, we've got to continue resuming our session. We don't want to end. Your audits are there. Where is the illegal acts in the audit? They would be reported there. So please don't say there's illegal acts going on, that First Service is absconding with information or funds. The auditors would pick it up. The auditors have an obligation to tell the board if something's going on, but they haven't. Again, ladies and gentlemen, I present to you, don't always believe the false statements out there. Look for yourself. This whole today's session is to empower you where to find the information, using critical thinking to look and say, this information from a third party independent says this. It doesn't say that there's illegal acts going on, breaking the law. So ladies and gentlemen, that is why it's important for you to go and look at that. So let's look at our audit. let's go to the last audit, 2020. Now every year, the auditors come in 3 months after a year-end close. So right now, at the taping of this, which is March 10th, the auditors are here doing field work. They're looking, doing their testing, they're interviewing people, they talk to the board, and they will produce their report, and it will be on the March open session as a receive and file. So if you look through the audit, you'll see a key area. They've received sufficient and appropriate information to provide a basis for our audit opinion. They have reviewed the financials. They have not found illegality. They presented their opinion, said the financials are presented fairly in all material aspects. And then you can go through and you can see for yourself the financial statements, because then they produce, based on the numbers that they've audited, they produce a balance sheet for year end to say this is the balance sheet, the audited financial balance sheet. They look at the income statement. And again, do you notice that there's something going on? They also report transactions and the numbers by fund. That's how normal big corporations do it. So they report then on the income statement. This is the information. These are audited numbers. They then do a cash flow statement at the end of the year saying this is where your cash has come in from operating, from investing, from financing aspects. And then finally they give you notes. So talks about the policy used. The association's books and records are maintained on an accrual basis of accounting. Talks about how do we depreciate? What are some of the policies that we have? It gives you notes on information like federal and state income tax. Also, assessments and assessments receivable. What makes up that amount? Was there a concern that an amount wouldn't be collectible? Was it adequately recorded? Again, the replacement, investments, all of that information is there in the financial statements that are audited. So if you don't believe your neighbor, you don't believe Facebook, you don't believe Chris Mitchell, go to the website and look for yourself. The information's there, the financials that are produced, as well as the audit. And the audit is the key, because that is what the board uses to rely on to say, auditor, we hired you, look at it, scrutinize the books, give us a report back. So I hope that today's lesson about where to find the information was useful. Now, this is a key thing, again, empowering you, the individual, to where to find the information. Now, we always may get questions, and I encourage you, if you have questions, and I'm going to ask Good Day Sun Lakes to put a little banner at the bottom that says slccquestions@gmail.com. Send your questions, send your financial questions, so I can answer them here on this platform for you. Because I do not want you, the individual member, fearful of, I hear we're losing money or money's being stolen. I want to provide you the evidential matter that says that's not happening. And I believe today, by presenting the financial statements in the audit, I've done that. Lastly, as we go through these financial corners, one area that I'd like you to hopefully join me again for our next one, I'm going to talk about the relationship of, for service, a vendor, and the board. Because sometimes I see that there is some confusion or misunderstandings. For example, I heard one thing about looking at job descriptions. Well, one thing is key is the board hires vendors to manage, to perform a service, provide information, and they have a buffer, because what that allows means is that a third party is running. I don't have to manage those people. I don't have a say, though, in those people. The board doesn't. And that protects the board from lawsuit, workers' comp claims, etc. And so historically, that's why Sun Lakes has moved toward a management company model for administration and operational management of the association. So I'll get into that a little more at the next financial corner. But again, I want to thank you for the time, your patience. I hope you had some libations during this. Again, if you have any questions, slccquestions@gmail.com. Again, my name is Christopher Mitchell, Executive General Manager here at Sun Lakes. I hope this was a great information piece for you, and I look forward to seeing you soon. Take care, stay safe. Bye-bye.